What do tulips, railroads, and artificial intelligence have in common? They've all fueled some of history's most catastrophic financial bubbles. Welcome to Evergreen Report. Today, we'll journey through the wild rises and devastating crashes that reshaped economies, and ask the critical question: are we repeating these mistakes in 2025? From the Dutch Tulip Mania of the 1600s to the dot-com crash of 2000, financial bubbles share a dangerous pattern: irrational exuberance, sky-high valuations, and a collective belief that this time is different. But history rarely forgives such optimism. In this video, we'll dissect 4 iconic bubbles, uncover their warning signs, and analyze whether today's market, fueled by AI euphoria and record-breaking valuations, is heading for a similar reckoning. Stay until the end for actionable strategies to protect your portfolio, and don't forget to claim your free investor's manual * in the description. Before we dive into the present, let's rewind to the 1990s. The dot-com bubble saw companies with no revenue soar to billion-dollar valuations. Sound familiar? Fast forward to 2025. AI stocks like Palantir trade at price-to-sales ratios exceeding 80, higher than even Amazon during the dot-com frenzy. Is this sustainable? Or are we witnessing the mother of all bubbles? Let's find out. 1. The Tulip Mania, 1637. In 17th century Holland, tulip bulbs became a speculative frenzy. At its peak, a single bulb could cost as much as a mansion. But when confidence collapsed, prices plummeted by 99%, leaving investors ruined. The lesson? Even tangible assets can become detached from reality when greed overtakes logic. 2. The Railway Mania, 1840s. Britain's railway boom saw companies raise billions for projects that never materialized. Shares soared on hype, then crashed when profits failed to materialize. The aftermath? Bankruptcies and a decade-long economic slump. Speculation without substance is a recipe for disaster. 3. The dot-com bubble, 2000. Companies like Pets.com and Webvan burned through cash with no path to profitability. The Nasdaq lost 78% of its value when the bubble burst. Yet, survivors like Amazon thrived by delivering real value, proving that innovation must align with fundamentals. 4. The 2008 housing crisis. Complex financial instruments like mortgage-backed securities masked systemic risk. When subprime borrowers defaulted, global markets collapsed. The takeaway? Bubbles often hide in plain sight, fueled by flawed assumptions and leverage. Every bubble shares 3 traits. 1. Exuberance. This asset can't lose. 2. Concentration. A handful of stocks dominate gains, e.g., the Magnificent Seven, now make up 32% of the S&P 500. 3. Valuation extremes. The Shiller P/E ratio, a measure of long-term value, recently hit 38, a level seen only twice before, in 1999 and 2022. But today's market adds a twist: AI. While companies like Nvidia report explosive revenue growth, others like Serve Robotics trade at 278 times sales, a sign of speculative excess. Experts are divided. Felix Zulauf, a veteran strategist, warns the U.S. stock market is in one of the 3 most overvalued periods in 140 years, with a liquidity crunch likely to trigger a 2025 crash. Bank of America echoes this, comparing today's concentration in tech stocks to the Nifty 50 bubble of the 1960s. Meanwhile, economist Harry Dent predicts an 86% collapse in the S&P 500, citing 14 years of artificial stimulus. Yet optimists argue AI's tangible growth, like $300 billion in data center investments by tech giants, justifies high valuations. The verdict? Markets are at a crossroads. A Fed rate cut could delay the reckoning, but as Howard Marks warns, when everyone believes an asset can't fail, the bubble is near its peak. To navigate uncertainty, consider these strategies. 1. Diversify. Reduce exposure to overvalued sectors. 2. Prioritize quality. Focus on companies with strong cash flows, not just hype. 3. Hedge with bonds and gold. Zulauf predicts a bond rally and gold surge to $3,000 if volatility spikes. 4. Stay agile. Avoid buy and hold dogma. Adapt to shifting cycles. For a deeper dive, download our free Investor's Manual Asterisk, a step-by-step guide to spotting overvaluation and building resilience. Bubbles are inevitable, but their lessons are timeless. Whether 2025 brings a crash or a correction, knowledge is your greatest asset. If you found this analysis valuable, subscribe to Evergreen Report for data-driven insights. Until next time, invest wisely, and remember, the best returns go to those who prepare, not panic.